Hey, what's up, everybody? I just wanted to go over kind of my morning markup. This is what I do for my morning markup charts. I'm in Eastern time, excuse me, I'm in Central time zone. So I basically come in about 5 or 5:30 in the morning my time. The New York session doesn't start till about 7, so I got a little while of markup and then get stuff ready for the day or whatever if I need. But basically what I'm kind of looking at is what's happened to the London session, which is 3 o'clock my time. So I basically look at what's happening from the London session to the New York session, and I kind of look at the London highs and lows to see, because a lot of times, if the London has a high or a low, and it's if you're looking at market structure and it's looking like it's bullish or bearish or whatever it is, if you see that London, it got to a certain point like a London high and started to drop, there's a good chance when New York opens, it'll push back up to that level and then drop according to the market structure. New York institutional money wants to get in at the best price, so they're willing to push it back up to get in at the London level so that it'll continue. And I'll kind of show you what I mean. But so my morning markup, basically what I do is I'll come in. This is actually yesterday, but today hasn't completely formed yet, so I can't really use it, but this is a great example. So these are 1 hour candles. What I would, this is midnight. This is CM time-based lines indicator. I have midnight marked. This is the London session, this lighter color, lighter blue here. The green is an overlap of the New York and London, and then this is the New York session. So this lets me know kind of where I am on the charts, and I will actually, let me go to my settings. You'll have to adjust this for your times or whatever if you're in a different time zone. But I guess it's just these three. So my midnight, I have to put in 1 o'clock. I just put 1 to 1:15 just to kind of give me a little small bar there to let me know what's going on. That's midnight. And then New York is 8 to 17, and then London is 4 to 12. So you may have to adjust these for your time zone, but this just kind of gives you an idea of where those boxes are. So watch this back and look at those if you need to. So basically what I would do is I'd come in and say, okay, first I want to look at a daily high and daily low from yesterday. So what I would do is I'd actually come to the day before. You can do it off the body, but I prefer to do it maybe off the wick or even a little below, because a lower time frame there is going to be some market structure here that'll tell you what's going on. I like to set alerts too to let me know when it's coming back to those levels. If you set an alert down here, you may still have 30-40 pips for it to move before it gets to where it really may turn around. So a lot of times we'll come in on the wicks and just do the high and low. And just kind of see, okay, there's my high and low. So you can kind of look to see maybe price will come up here and then drop, or come down here and go back up. But of course, you don't want to take it just off this level, just because you want to break it down into smaller time frames, look at the microstructure, look at order blocks in the 5 minute to 1 minute, see if, and then watch it react off of that and start breaking that microstructure back up, then retest to an order block and then go. I'll do another video on entries at some point, but for now, I just wanted to show you all this quick markup. So, you got your daily high and daily low here. You can even come in if you want to, and in your settings and do daily low or yesterday low, however you want to do it for yourself to make it easier to remember. Daily high is usually what I use. So that gives me my levels there, and you'll see it kind of broke into here. It came back down, which it broke back into this order block, perfectly into this black order block here, and then it ran up and then actually retested the daily high before it ran again. Okay, so you see how perfect from wick to wick this is for the retest. Now I'd always thought that most retests would break up big, come back perfectly, and then run. A retest can actually come back below the line that it broke and then come up and then retest again. That's something I actually just learned. So but a lot of times if it does break down below that level, the reason being is because there's the order block. It's got to come back and fill in the algorithm before it goes. So even if it doesn't do a perfect clean break and retest, you just look at the order block and see, okay, it did react off this order block here and again here. That was your double bottom basically, or if you break it down, it may have ended up being some type of other pattern or something in there, other order blocks you could see, but I'm just looking at the 1 hour. So basically you get this run up and break. Okay, so that just kind of the daily high and low just gives you an idea of what happened the day before, because a lot of times if it that where it retraced would be an order block, and that may be an area where it may retrace again for a double top or a double bottom or whatever. Excuse me. So so from here, what I would want to do is So I marked up my yesterday. I'd want to come in, I'd want to look at London high and low. So this is 3 o'clock, 4 o'clock, and that wick is a little bit higher. So I'd put another line here. You can make it a different color if you want. I'm going to put London high, and then I'll make it a different color. Let's just say green. Okay. And of course, you know, this is a little bit higher, but this hasn't happened yet. I'll be up at 5:30 in the morning. So I'll be in this candle, maybe even this candle is where I'll really be looking at it and doing my markups. So I'm wanting to look at the highs and lows. So sometime in this candle, sometime before the New York session open, while I'm doing my markups, it came down to a low also, down to this wick. So you can come in, excuse me, and put in another line there. Okay. So now you've got your yesterday's highs and lows and your London high and low. Let me mark that. It's your London high and low. So then from here, you'd want to come down and start breaking down smaller time frames and seeing what's going on. Okay. London low, or London high and London low. You see it ran up here and it ran back down. Now, what you'll notice is at the 7 o'clock where New York session came in, you know, from here, price ran back up and then it started to come back down. And then in the New York session, when the New York came in, what did they do? They pushed it back down and then back up. Okay, so you imagine somewhere in here might be an order block. Let's see. Let's go to the 15-minute. All right, so you see you've got your order block on the 15-minute. You've got it from here all the way down to the wick. Okay, so where does price retrace to? Into that order block. Okay, let's break it down even further. Let's go to the 5. Okay, so what do we have here? All right, we've got a 5-minute order block down here. Where does price come back to? Perfectly, right? All right, let's go even further. Let's go to the 1. All right. So now you've got your order block here. And when I get this small, I usually start accumulate or accommodating for missing price. You know, you may have a little bit of missing price there from, wish that block wasn't there. Sorry, guys. Let me get a little closer. It'll be easier to see. But you got this wick up here at this level on this gray candle here. You got that wick. And you'll notice there's a little bit of missing price there. So there's a chance it may come back and fill that. There's not much. Sometimes it doesn't always perfectly, but there's a chance it'll come back there. So you basically, you know, you're looking at this happened at what, 5 o'clock, 5:30 in the morning, somewhere in there, or 5:37, I guess at 5:38 it says. So you would expect at some point it's going to come back and retest that level. So what happens? 7:01. Literally like a minute after New York market opens, I'll say 7:02 is where it would actually form another bullish order block and start to run back up. Okay, so you could take it here when it retests. Now it might just blow through this and you might lose. But what you would like to see, and this is where I would talk about entries a little bit, I'll do a whole video on it at some point, but you want to see this start to break back up and you want to see it start to break the wicks before it. You want to see it start breaking these wicks. So basically, when you see this price run up and it broke this bearish order block here, that lets you know that it may come back down again, or that lets you know that it's probably going to run. But before it does that, it's probably going to retest back into this order block again. It almost always does, at least missing price. So let's just say you mark missing price there. Okay, so you've got it in missing price. So if it came back down to this level, this would be your entry. Not necessarily here. You want to see it break that microstructure up a little bit and then start to come back down. Okay. And this wick here just barely breaks these 3 candles where this bearish order block is. Okay. So this is actually a bearish engulfing, but your order block would be back here. Okay. So it breaks that a little bit and that lets you know there's a good chance this is going to turn back up. So then what does it do? Come back down into that block. If you just marked up even just a block, look at that wick. Just freaking perfect. So let's just say you took a trade from that level. Okay, you're going to get in somewhere in that zone. You're looking at let's say you pad it a little bit because you'd want to put it down below this. You could put it down below this order block. Let me get out of there. You could put it right below this order block or this wick if you wanted to, but you see that it did come down lower here. There is a possibility that it could retest back to here and then go. even though there's no real, no real reason to, because the missing price was filled in here. There's no real reason for it to come all the way back down, but you never know. And of course it could just reverse. More than likely it's going to test here and go. But let's just say you went ahead and got in at missing price on that wick, and you took it below this other the order block. It's 3.5 pips. Okay. And you could even do it a little bit tighter. I always do it a little bit below in case there's a stop loss hunt. If there's a lot of liquidity down here, a lot of orders for buys, and the stop losses are right at this level, they'll push it a little bit lower sometimes to take out your stop loss, and then they'll go. So I sometimes will pad it a little bit. Sometimes even my entries too. It depends on, I don't like taking too big of a pip stop loss, but I'll try to get somewhere between 2 and 3 pips or something. So even if I padded it a little bit, that's 3 pips, y'all. 3 pip stop loss. So that just gives you a more accurate entry so that you can take a larger lot size. So let's say you're used to a 10 pip stop loss, and you take a 1 lot, which is $10 a pip, 10 pips, it's $100 possible loss. Okay. You'd have to have a pretty big account for that if you do your 1%, 2% risk management trades, but still, that gives you an idea of the numbers. So let's say it was a $100 loss, if it was a 10 pip stop loss. Well, now you've got 3 pip stop loss. So let's say you're still okay with the $100 loss. Now that's you could actually take like a 3.3 lot or whatever, which is $33 a pip times 3. So now instead of taking a 1 pip, or excuse me, a 1 lot and getting $10 a pip, you're actually getting $33 a pip because you've got a tighter entry here. So anyway, from what I understand and what I've been seeing the last few days as I've been doing this type of markup, is these levels, these London highs and lows, New York will eventually push it back up into one of them and then go with it, depending on market structure. So if you go back and look, like on the 1 hour, basically, it looks, if you get close, it looks bullish, right? It looks like it's going up, but where's it going to? It could very potentially be going up to meet missing price, or there's an order block up here that could retest to. And when you really go back at the market structure, overall, this is a bullish structure or bearish structure. This has been coming down for a while now. This is a little bit of a complex pullback, but it just pulled back to fill in that missing price. And more than likely, this is going to go down again. So, catching this on a perfect setup, what I would rather do is I would rather actually catch the London high down with the trend. But when you see those levels play out perfectly like that, where it comes down and it retests, you have a pretty good idea it's probably going to run back up or run that way. So if you would have caught that trade down here, at that order block or whatever, and you would have taken it back, let me go down to a smaller time frame. It'll be a little better to see. Let's go to the 5. So you got your London low and London high. You could have held this, going up or whatever, especially if you look back and you saw that order block that was up there and you knew that there was an order block up here that it could missing price, that you could let it ride all the way. But, I'm a little more conservative. I'll take what little swing I can get. But if you would have taken it down here, around this area if you took it here and just stopped it before the London low, you would have caught 15 pips. Around 14 and a half to 15 pips. If you were getting $33 $33 a pip or whatever times 14, I'll do the math real quick. It's $466. And that happened in 15, 20, 25, 30 minutes. In 30 minutes, you would have made, so you don't have to have these huge swings if you get those tight stop losses, and you can take a little bit larger lot size. It just gives it, you don't have to run as far before you can make your daily profit. If I have my trading plan and my daily profit's $300 a day or $500 a day, I can just let it run. And once it gets to 500, I can take my profit and walk. If I want to let it run a little further, that's fine. But you basically can, you can kind of see what's going to happen. Now there's always a chance that it reacts off this order blocks and tanks again. It doesn't come all the way up. But, again, that's where you would set your limits, or you'd set whatever you're comfortable taking, a $300 win, $500 win, whatever, and just walk when you get to that amount. But this is basically what I look at. This is on EU. There's 4 or 5 pairs that I like to look at every morning. odd USD, USD CAD, USD Chef. I kind of look at those a good bit. I like looking at the JPY pairs, but they move a little bit quicker. So, and a little bit more movement. So trying to get a little bit better before I start playing with those too much, and GBP. But for the most part, these coins in the London session, especially the London, New York overlap, any of those USD, Euro, GBPs, CAD, any of those that it's actually the market is open for them, or whatever, it's actually their normal day. There's a lot more volatility, especially in this overlap here. So the London session has the most volume, from my understanding, but the overlap is the most volatility, the London, New York overlap. So if you can get on the market every morning before New York opens, before 7 a.m. Central or 8 a.m. Eastern, whatever, you can kind of come in here and look at your London lows and highs, and there's a good chance it's going to react off of one of those sometimes when New York, within the first hour and a half of New York opening. So anyway, hope this video is helpful. I hope you can kind of understand what I'm looking at with these order blocks, how price moves, how you can kind of look at, okay, let's just say you were afraid this wasn't going to run all the way up. You can look back at the last major order block. You kind of had one here. So you might could put your take profit here. You had one a little bit higher. So you could put your take profit there all the way up, whatever you need, whatever you're comfortable with in that trade. But you could go ahead and set take profit levels somewhere up here if you just want to let it run. So anyway, I think this strategy seems to be working really well for me. Again, I'm still learning it, so I hope I'm not saying anything that's confusing y'all. But this strategy seems to be pretty solid with those order blocks and how the market moves and all that stuff. So anyway, I hope this helps. God bless. Y'all have a good night.